Central Bank indicating that nationalization is going to be the way to go in the event that many of these rescue banks do not find suitors. Joining me in the studio to take a look at that news is Bismarck Rewane, CEO of Financial Derivatives. Thanks a lot, Bismarck, for joining us on the show. Right, first of all, it's like a never-ending saga, this issue of nationalization and, or rather, of sorting out the rescued banks. Now, the issue is no longer liquidation. It seems like nationalization is the way to go. But really, was liquidation an option in the first place?
No, I think liquidation is always the final option, but the undesirable outcome.
Right.
The reality is that nationalization also, in view of the current reform agenda, nationalization is also a not totally desirable outcome, but it will be the least of all evils.
Why I mentioned that was that, you know, the cost of liquidation in the context of Nigeria, do we have the infrastructure
you can't
to
afford
cope with
it
right now? Because we have 8 banks, 4 billion was already thrown at them, and we know that there's still a huge problem there.
No, the cost of liquidation of one bank is what no regulator will actually wish for. The reality is that the best option is for there to be a merger and acquisition promoted and supported by the regulator, like what is on the cards. And I think that is what is going to happen. I think this was a wake-up call to all parties to know that basically it is in everybody's best interest for us to have an arrangement that works at
some have suggested that the whole talk of liquidation really was to really put pressure on the shareholders and, of course, those banks to get a deal on the table.
Absolutely.
Because we've seen, but unfortunately, I think there's been a huge impact of that news on those banks.
Yes, it's been a negative impact.
And their share price.
There's been a negative impact, but I think it's it's a wake-up call, it's a reality check. So people now know that it's best to do a deal, and that talking endlessly and without any objective is not an option at all. I think what the governor of the Central Bank did is right. What Deputy Governor Wole has said is also consistent with what the governor said. This is no time to hang around for so long. Indeed. Like I said, in the US, this thing was worked out over a weekend. Bank of America and Merrill Lynch, Bear Stearns and JP Morgan. So if banks of that magnitude, which have the kind of systemic relevance, even global systemic relevance, can be put together in such a short period because of the urgency of the situation, then why should we take 2 years to be talking about these puny banks in reality?
Indeed, 2 years is way too long.
No, it's a endless journey.
All right, but there's still the issue of the shareholders, because even to nationalize, it implies
you need shareholder consent.
You would need some shareholders' consent.
Right.
What's the strategy that CBN or the strategy the regulators can take in this regard?
No,
because
I think
we just have to nationalize. Liquidation is not something we want to consider.
No, even nationalization, they can go to court. They are minority shareholders' rights, but it's not in anybody's interest. These shareholders have no tangible value at this point in time. What they have is an intrinsic value or a perceived value, which can be actually ascribed by whoever is going to buy it. But if you keep on putting obstacles, that intangible or that intrinsic value will quickly erode, and you will have what in reality is a negative. So the shareholders' funds of these banks are zero. They need 25 billion naira minimum. So any of the shareholders that feel aggrieved should bring up 25 billion naira and put it on the table, and then they can run their bank. I don't think that's the issue. You cannot be a dog in a manger. You cannot stop the guys who have the teeth to eat the bone, and then you say, don't eat the bone. No, I'm sorry.
Indeed, we have to get these deals off the ground. But let's even look at the broader banking sector.
Yes.
And it seems, there's just a feeling. It might be to some extent because of the issue of the rescued banks dragging for so long. But there's just this feeling that banking as an industry is still under pressure in Nigeria. What are your thoughts?
No, I think fundamentally the banking sector is attractive. That industry is attractive. It has gone through a shock period, and there is further consolidation. What happens normally in consolidation is that the survivors become more profitable. While some are dealing with post-merger integration issues, others who are standalones are also. So if you look at it, price-to-book basis on an earnings multiple, they're still way. The earnings multiple of the market is about 17. The price-to-earnings ratios of the historical for the banks is about 10. If you take a forward-looking PE, it's even lower than that. These are bargains, really. And if you look at, because of the governance structures, because of the policy, because of the emphasis on risk management, and some of them have under multiple jurisdictions, working in different markets, I think this is it's a steal, actually. These are not just deals, these are steals.
And we just mentioned that the rescued banks, the share prices have plummeted over this period. And, you know, you've made a point about the valuations. Some still question it because the big question is loan growth. You know, these banks are all about lending money out. We're not seeing that right now. And, you know, there's a thought that, okay, we're just in a recovery mode. It will take some time for us to get out of this. But there's still some doubts. Looking at the economy, looking at banking penetration, where it is now, are you confident that come next year we should see strong recovery in the sector?
First and foremost, in the short run, the write-backs of loans have been provided for and actually written off. We will give them some extraordinary income. Long term, the business model, is it sustainable? Yes, it is sustainable. But the revenues are going to come from payments, settlements, efficiency, transaction banking, and so many things, not just loan growth. Because loan growth in the sense that if it is tied to the fast-growing sectors of the economy where the risks are manageable, then there'll be loan growth. And now, what of the retail sector? Banking exclusion in this country is about 47%. That is, financial inclusion is only about less than 60%. Those who even have bank accounts that do not utilize it for payments, for settlements, and all of that are there. And financial inclusion will increase the revenues, the deposit liabilities, and the activities of banks significantly. That is going to come through mobile banking, through the new cashless economy, and so many other things that are coming.
So essentially technology, innovation will bring out the value in the
banking
sector.
Will always be profitable where there's a high population, where there's a trader, a huge trading population, and where the generation of people, the demographics show that the bulk of the population are below 18. So who are we banking? Are we banking for tomorrow means that those who are 15 now will be 18 in 3 years' time. Those are the targets. And that's where things are happening.
Okay. What I hear you say is final word by the banks.
By the banks, yes.